Good evening. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening of Monday, the 10th of June, 2024, 6:20 p.m. Central Time. So as I'm looking at the markets, you saw today the metals tried to lift a little bit, especially the copper back into the 454 level. But it's one of these quiet periods. Don't get too excited here. The big events are going to come this Wednesday. CPI number is probably the trigger. Yes, it may be countered by whatever the Fed dot plot shows, but the Fed's widely expected to just sit pat. It'll be the question and answer period we always seen, but it's probably going to all key off of the CPI. And, the headline number will be one set. The core is going to be another. I'll talk about that tomorrow, not today. When we take a look at these markets, tomorrow you have the National Federation of Independent Businesses. They come out with their May Business Optimism Index at 5 in the morning. It's just a single number. Redbook Group will come out with retail sales, and they started to slip back under 6%. We had gotten to the point where they had gotten over 6, now they're starting to pull back a little bit. And the question is that a weakening of the consumer or just a seasonal? The first day of the federal FOMC meeting begins at 9:30 in the morning, and we're going to get the API numbers coming out at 3:30. When I get into the financial markets, I'll talk a little bit about Apple and what it meant today to the marketplace and what their product is with AI, which is all interesting. But remember, this is the beginning and not the end and what it means. All right. So if we look at the gold market for the week, today's first day of the week, you're up 0.11%, not doing an awful lot, but it is trying to pull back to the 18-day average. The CPI and whatever we hear out of the Fed will probably be the determining factors as to what's going on. And it can go any which way. If you get numbers that are hotter than expected, I'm telling you, you can get a risk off very quickly in these markets. If you get numbers that are really low in CPI, ahead of what everybody thinks, you'll get a risk on and everything can take off to the upside. Interest rates will fall. It'll be wild. I'm telling you got to be careful about Wednesday. The one thing that I see is how the market had a spike here, came back up for a spike and set back down. The pattern when you put on the swing line knocks that out and just says, hey, you got a higher high, a lower low. Markets just fought a battle on a rally back up to the 18-day average, couldn't stay there and let go to the downside and went back to the Bollinger Band on Friday, and today a retest of that area, and it sort of held it. That's all that you can make, in my opinion, out of that chart. The momentum oversold in the market. When I look at the gold-silver ratio, I thought the market might pull back to the 18-day average, which means silver could gain a little bit on the gold since it's lost so much recently. I haven't changed my opinion on that, but we'll see. You do have the higher high, lower low, and oversold condition there. So on both markets, I don't see a trend in gold or silver. Copper's getting a two-day bounce, but it has this embedded reading. To get any real rally going, the red line has to close over 21. You haven't done that. It tells me the market gets sold on rallies, and the traders bail if they lose the embedded reading. In the platinum market, you've also come down to the Bollinger Band and held, and you could embed 1, 2, 3 tomorrow. That's going to be important. Takes 3 days where you're under the 20 level. So if today finished like that, you already had Monday where both numbers were under 20, and you had Friday. The day before, you didn't, as you can see. So tomorrow's the day that it could embed, and that sets that market up then for even more bearishness. Markets often don't embed, by the way. The Bollinger Band down to the 100 and 200-day average is the support, and the dollar's gone in 48 hours from a lower Bollinger Band and a challenge of the 200-day average on Friday to a whipsaw, a new high on the move, and this is probably where it stalls out. I think you've set trading ranges up is what I'm thinking is done going into the CPI and the FOMC meetings on Wednesday. I warn you, that is something you might want to take a lot of caution about as you're going to trade it. Now, we'll be talking about that right here. When you go to our free offers at the bottom of the page after you make your selections, you come in, and what happens is it's going to ask you to sign up, and away you go from there. And there's so much to be had. Our Spider ETF video, you can give a trial to, my research, Linn research, the price counts that we put out. There's just an array. All you do is you go to iraepstein.com free offers. If you just go to iraepstein.com, look on the left, you'll see the free offers. You can also click up at the top here at any time, and you'll be taken right to our website. I'm Ira Epstein. You have yourself a good day. I'll catch up with you all in the morning.